same again is came for the repetition. Part number 5. City rate in UAE, mainland company, qualifying free zone, multinational company. Taxable person, the UAE corporate tax, taxable person, mainland. Here the important part we have to understand, we are saying the mainland, non-qualifying free zone person, even is a free zone person, but is not qualifying. So it will be subject to 9%. And any company having NP in UAE that earlier we've seen some of the example, the corporate tax rate is the first 375 is the 0%, excess is the 375%. So as earlier I mentioned, effective rate is not 9%. We will see how it's not 9%. Let's take the example, taxable income is a 1 million. So first 375 is a 0%. Now from 1 million, we have to minus. The 1 million is not the accounting income. This is the taxable income. We have to understand and be careful over there. From 1 million, we minus 375, balance is 625. Then we apply the 9% over there. So our tax is a 56,250. Now, what is the effective tax rate? And why we are calculating the effective tax rate? This is also important part. Effective tax rate, because this is the amount of tax we are paying against the 1 million. So tax amount divided by the taxable income. So this is coming 5.6% effective tax rate. We are not paying the 9%. It may vary according to business effective tax rate. But let's see what is why we are working on that. Because in case you want to increase your prices, you cannot go and if you cannot ask your marketing team or business development team, okay, just increase the prices. As a similar concept, we cannot apply as a VAT. The VAT in where we say, okay, we will charge you 5% VAT. Here we cannot say we will charge you 9% corporate tax. Because the VAT is a direct tax, the corporate tax is an indirect tax. So we have to understand what is the impact on our business for the indirect tax. Because again, the owner will not bear, management will not bear, the shareholder will not bear the additional burden of the corporate tax. But on the other side, to increase in price for the 9% also will not be the justification. So we might say to the clients, okay, due to the taxation or the inflation, we are raising our prices. Small business relief, we will discuss shortly. Small business relief is if the business income business revenue is less 3 million or less than 3 million. Important is 3 million or less than 3 million. So they have the, as per the UAE government initiative, they give the small business relief. So small business relief is available to the natural person as well as the juridical person also. And this is available up to 31st December 2026. So now the next is the qualifying free zone. What is the qualifying free zone? This is one of the special areas based on the applicable regulation. Each free zone, they have their own authority, on body and the regulation based on they are operating. So if they have the qualifying income, what is the qualifying income? We will discuss in detail in the free zone session. What is the qualifying income and what are the conditions and what are the criteria, qualifying income, disallowed, allowed. So here the qualifying income is a 0%. We say the halal income because if allowed, acceptable in the taxation, we are just for understanding, we are saying the halal income. Just for our understanding, we are using the halal and maybe for deductible, we are saying the halal and non-deductible, we are saying the haram. We will use such terminology just for our understanding. We'll discuss later in the next session. Non-qualifying income, the non-qualifying income, again, we have to see if even we have the non-qualifying income, but there is the additional criteria, pass the de minimis test. What is the de minimis test? We will discuss in the detail. Here we are just taking the understanding what is the criteria. If the non-qualifying income pass the de minimis test, so again, it is a 0 rated. So no threshold for the qualifying free zone here. Earlier, in terms of the corporate tax for the mainland and other companies, non-qualifying free zone, here we are saying the threshold first 375,000 is zero rated, but there is no 375 threshold for qualifying free zone. Qualifying free zone can elect subject to normal taxation, but is optional. If they want to use the 375,000 threshold as a 0%, they have to offer the standard corporate tax. But again, this may vary on organization to organization, operation to operation, or business organization structures, because maybe they want to part of the corporate tax group. If the qualified free zone person, they cannot be part of the corporate tax. But again, the working or rational, the strategy we have to evaluate on the each business and the operation and the grouping structure, which will be beneficial. Here you will not get 375 threshold for zero rated. You can, and qualified free zone person is optional. Here we mentioned the qualified free zone person cannot join the corporate tax, but if you opt for this, then you can go. Small business relief will not be available for the qualifying free zone person, but small business relief available for the taxable person that we are discussing here, subject the revenue of 83 million or less. This condition we have to see. And again, we have to see what are the revenue calculation we are doing there. If we pass the de minimis test, the non-qualifying income also will be 0%, because maybe an entity organization doing some business and small amount of that, they're not meeting the condition criteria of the qualifying income. Still, they give the option, okay, maybe there's some small transaction they did and they still have the flexibility, they will enjoy the benefit of the 0%. If they fail, it will be 9%. Up to qualifying income is 0%, other than qualifying income is the 9%. But this topic we will discuss in detail, what will be qualifying and not qualifying based on the activity. That is very interesting topic. Next is the multinational entity. In return also, the one point is appearing, are you part of the multinational entity? We simply say no. But what is the definition of multinational entity, and how we come to know? Let's see here. First, the multinational entity, the top-up tax at least 15%. Recently, they already announced it is 15%. Now we just for our understanding purpose, the definition of multinational under the corporate tax law. Okay, this we've taken the guideline from the corporate tax. They're saying the consolidated revenue of that multinational organization or entity, they are operating multinational entities operating worldwide. They have operation in different countries. So now if their consolidated revenue is more than 750 million euro, or equivalent to 3.15 billion AED, so that organization will be part of multinational organization. In our return, this option is appearing. So we have to be careful and select or not select based on this rule. If you select that, the additional regulation of the MNE will be open on that. Let's move to the next part 6, business vehicle. Now this is the interesting topic, the incorporated business or unincorporated business. During the registration part, we have the many queries and the cases where even the most of the professionals who are serving the clients, they are facing the challenging, whether it's LLC or a natural person or the sole proprietor, or what are the definition and how we consider over there. Let's move to the next. Normally we use the word vehicle. Why the vehicle? The understanding for the vehicle, if we want to travel from one place to another place, we must use the vehicle that may be the car, some other mode of vehicle that we saying the word vehicle. So similar, we say when we do the business, how we do the business and what are the form of doing the business. So this is the terminology just for understanding business vehicle. So let's see, we might set up the operation through unincorporated business, because based on the understanding or the management or the operation, they may choose the unincorporated business or the corporated business. So unincorporated business, in terms of unincorporated business, sole established, here we are saying unincorporated business, whatever the salaries and wages of the owner 100% disallowed. So this is the important part, mostly because LLC companies, they are 100% allowed, and but unincorporated company is 100% disallowed. What does that mean? If owner of the sole establishment is taking the salaries, wages, and any kind of benefit from the company, that will be not deductible expense for the corporate tax. Okay, now the unincorporated business, sole establishment. So the company can be formed in the form of unincorporated business. It will be written on your trade license. The legal type is a sole establishment or the partnership, maybe the civil company, maybe the professional license. So there will be appearing on that sole proprietor establishment, sole establishment. Okay. As earlier mentioned, this salaries and wages not deductible expense for the unincorporated business. Now, these business are transparent. Here, the important part: these business are transparent, because this is not what is the transparent? When we say the unincorporated, in term of law, the ownership of the business and the owner of the business, they do not have the separate legal personality or entity. What they mean? Because the such companies, whatever the liability of the business, it will be owner of the company 100% liable. There is no limited liability or of that. Let's for understanding for the unincorporated partnership or sole establishment or partnership, because the business transparency, because here we are saying business will not pay the tax. Who will pay the tax? Just for understanding, we will take the example. If the business have the dispute and the business, some of the supplier or some of the customer, either way, stakeholders, either way, we can say the stakeholders associate to the business, they made the case against the sole establishment, and the sole establishment cannot pay the tax penalty that even the court gives in favor of the vendor or the customer. Sole establishment, let's say they give the penalty of 10 million. The sole establishment total asset is a 5 million. So they will sold the sole establishment asset and the 5 million will be recovered, but still the balance 5 million owner of the unincorporated business will pay. So this is the understanding when we talk about the unincorporated business. They say the owner still liable for the operation or any kind of the claim from the such mode of the business. So that's why they say business are transparent. Business are transparent. Who will pay the tax? If business will not pay the tax, who will pay tax? Business here the owner will pay the tax. Now our time is short, so we are just trying to quickly stop somewhere. Waqar Ahmed, Mr. Waqar, I appreciate if you avoid the writing. If you have any points, you may send to the chat, but I appreciate you not write on the screen. Business partners, sole proprietor pay tax in the UAE. Here we are saying business are transparent, they will not pay, but the partner or sole proprietor pay sitting in UAE. Owner will submit tax return and pay the corporate tax on that. So the natural person relief, they have to consider based on that also, but the different entity. Let's here we are saying owner will pay the corporate tax. They will file. If owner have multiple business, multiple sole establishment, multiple partnership, they will pay the corporate tax based on all the income under their own name. They will submit. So let's move to the next because time is already over. Here we are saying now we are saying the owner will pay the tax, not the sole proprietor, but on the same side, we are saying UAE do not have the income tax. So because the owner is getting the business income, they will pay the corporate tax on the business income. What they are doing via trade lessons are if the owner are doing the business activity via the trade lessons, are they needed to be here? The important part, they required to take the trade lessons. Then they have to pay the corporate tax on that, because there is some certain activity where they do not require the trade lessons, and like the real estate, some of they do not require if personal investment. Incorporated business. Incorporated business, here again, the salaries and wages are deductible, but still we have to see the connected person, the relative, up to 4 degree up and 4 degree down. So we have to consider arm length rules. The incorporated business, we already seen the private PVT, LLC, PGSC, all this form of companies. Here's in this scenario, if the incorporated business will pay the tax. Today, our time is over, so I'm going to stop here. We will start the next session from the same business vehicle. And we appreciate your feedback on that. And we'll share one link where you can submit your quiz as well. Thank you very much for your time. If I'm just opening the chat, if you have some question, I'll just try to cover that. I'll just try to cover that. I do appreciate if you have some question, please share. Our next session on Sunday. We'll start from here. Yes, the video will be shared with you guys. Foreign dividend exempt or not. The foreign dividend, as I already mentioned, the participation exemption, we have to see the applicable condition. What are the condition are satisfying the condition? Based on that, we can advise, explain. Because foreign dividend, local dividend without any condition is exempt, but foreign dividend we have to cover, look into the participation interest. Because normally participation interest, I mentioned the 5% shareholding or the 4 million, the investment in the foreign dividend. But still some other clause we have to go through and then consider that. Here, I just want to the question, salaries in incorporated business. Yes, salaries in incorporated business 100% allows. We can increase. Yes, we can. Again, this is the subjective area. Yes, you can increase the salary expenses, but under the arm length. Just now on the last point I mentioned in the last slide, if you see the arm length means in a similar business in the market, they are paying to the similar position amount of salary and allowances. You can consider the same, because this is very common. Normally the people ask, okay, we can increase our owners or the shareholder or directors, the salaries, so our tax base will be reduced. So it is not like that. You have to be rational on that and do the calculation, how much can be the increase. This is subjective area, but again, case to case, you have to see if the company is earning the 100 million and the salary of the CEO may be the different. If the company is having only the 30 million and the salary of the CEO, again, the size of the company is small now. So relatively, you have to see the similar industry or similar size of companies, how much they are paying. So I give you the example for understanding. See here, the another point, Mr. Asif, he mentioned the natural person, if will do business or if having trade lessons will consider natural person. See, the having trade lessons standalone cannot be marked under the juridical person or natural person. You have to see the legal type. Just now, the last topic we are covering. So we just now the last topic we covered. For sure, the next we will look into that. Yes, I can take your question more also, but let's see. I'll try to answer on that. Next Sunday class, come early, and 1 hour before I will be online, so we can discuss all this quiz over there also. Because during the session we have to cover the main course also. That is otherwise because the timeline is very short. But definitely I'll try to answer on that. I'll be available 1 hour before and we can discuss all this. Thank you very much. Have a nice day.